Hello guys, this is your modern day spokesman. Welcome back to the channel. If you're new, welcome to the channel. Don't forget to hit the subscribe button so that you don't miss out on any future videos. So today we're going to be looking at the audit process in its 5 stages, which we're going to look at in detail. So by the end of this tutorial, you'll be able to clearly understand how the audit process goes about. So we're going to start with the first process. Our first step is the preliminary engagement activities. Now, this is where the whole process begins. It begins with you as an auditor either accepting a client or continuing, in this case, continuing with an existing client that you audited previously. So now when it comes to accepting, deciding to accept a new client, you obviously have to look at the client and what business that they are in, and you also have to go and evaluate whether you can perform the audit if you've got the resources to perform the audit. For example, if you're going to be auditing maybe a mining company, you might need maybe an audit, they call them an auditor specialist, maybe a geologist, since you won't have all the skills that you might need here. So you might have to have someone who has expert knowledge on the industry, or you can either decide to continue with an existing client. So at any stage, you can decide not to continue with a client if maybe you see your client has been involved in some unethical activities, and you can decide not to continue with them. However, if you do decide, if you do decide to continue with them or to accept the engagement, the whole arrangement has to be formalized in something which we call an engagement letter. This is basically a contract on how the engagement is going to be performed. Now, step number 2 is planning the audit or planning an audit. So in this step, you're supposed to have a deeper understanding of the entity and the environment that it operates. So for example, if we're going to be talking about maybe a clothing brand or retail store, maybe in the clothing sector, you need to understand that industry, and most importantly, the materiality. This is a concept I'm going to elaborate on the detailed tutorials that I'm going to do later on. So for example, let's say you set your materiality on revenue at 1 million, and that means anything under a million will not be considered material. So anything above that might cause you to investigate more. So the materiality links up very well with the entity's internal control. How strong are those control? Can you rely on them? Sorry, this is obtaining audit evidence risk assessment. So it really links up with the materiality. If it depends on how well you can rely on the internal controls of the entity, how good they are, and also you're also going to have a certain reliance on the internal auditor. So this is where you look at the internal auditors skills, their competence, and also you must also be aware of the fact that the internal auditor is an employee of that entity. So they are not going to be as objective as maybe you might expect them to be. So you'll have to use your professional judgment when you look at this sector. Now, when you're done with the risk assessment, your fourth stage will be to perform a test on the controls of the entity and also do substantive testing, right? This is where you're testing management's assertions. For example, inventory. If they say a particular amount of inventory is showing on the statement of financial position, so you can just to confirm the management's assertion of the existence of the inventory, you can go and do the auditor can go and do a physical count on the inventory just to satisfy the existence assertions, among so many other assertions. Like I said previously, I'm going to do detailed videos on each of the stages, right? And another thing is that you might also inspect supporting documents. This is satisfies the occurrence assertion in the case where there's a sale order that has been made. So you can go about looking at the documents just to confirm that this order did occur. So this is a very, very critical point or stage of all the stages are important, by the way. All of them are important, but this one is a very important one because this one actually tests what management or those charged with the governance of the organization are telling you against what is actually on the table. So now, after you've concluded with your substantive testing or procedures, like I said, I'm going to elaborate on those ones on a detailed video. You now have to go and report. So now you have to understand that in this stage, an auditor cannot provide absolute assurance. There is no such, right? But it is your duty as an auditor to try and provide a reasonable assurance that the financial statements are not materially misstated, right? But this does not mean that there could be small errors and they could be misstated due to maybe some errors or some principles or just things that can cause those mistakes to occur. But in overview, you have to give an audit report on the level of assurance on this financials on this audits that you've done and how they affect the overall financial statements of the entity. So now these are your stages, by the way. So I'm gonna make a video looking at them in detail, but overall that is the audit process.